Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, March 8th, 2016. Well, folks, I told you over the last few days that these oil stocks that had gone parabolic were going to pull back. Take a look at Chesapeake today, down 14%. U.S. Steel down almost 10%. We can go to other ones, SDRL, another one down 14% here. Freeport-McMoRan down about 10% as well. And the bottom line is, so many people get caught up in these massive runs and they think they're missing the boat. But the real reality of it, by the time you think you're missing the boat, these things have topped out. And then they're going to come crashing in. So by the time, the average person's buying up here, right? Think about it. There's a ton of volume here. There's millions of shares on FCX being bought in this upper range, right? Look at all these candles. These candles are like 1 to 5 million shares per candle on the intraday going back to Friday, right? So here, think about all the amateurs that are buying right up here, okay? And just think about, again, all the pikers there that are getting stuck in these positions as it comes in. And, very easy to call it. Just look at the chart. I want to show you this chart, guys. Look at the daily chart on Freeport-McMoRan. It was right up into the 200. Now look at the chart of SDRL. All right, think about all the people that bought SDRL up around $7 at the 200 moving average. All right, think about on U.S. Steel. The 200 MA right here, all the people that bought. And these are all amateurs. There's no pros buying up here. That's ridiculous. There's no pros at all. So it's all amateurs, and you got to start to learn how to read the charts. The charts are unbelievably important. All right, in fact, on U.S. Steel, good example, we put out puts on U.S. Steel. So obviously puts meaning that we make money when it goes down, when it was at the 200. And now we're in the money very nicely on these puts. And we'll continue. Honestly, it's going to continue to pull back a little bit in the short term before having another potential bounce or move up. So these are the types of things you have to recognize, folks. It was a very easy call. The one thing I will say about today, stocks that were pulling back yesterday and Friday, like Netflix. Netflix had a nice down day yesterday, bouncing today. Why? Because money's rotating out of oil names. So again, if you look at stocks like ExxonMobil with oil down today, Exxon's pulling back. Yesterday, Exxon had a great day. Look at the move on Exxon yesterday, right? Big move up. Today, it's pulling back. And again, it's the opposite of what's going on in the tech sector. Take a look at Facebook today, up $1. Beautiful move on Facebook. So you're just seeing this rotation of capital. There's no panic in the market yet, not even close. And if there was panic, everything would be down. You'd see oil stocks down, Facebook, Netflix, Google, Amazon, all of them would be down. All right, because you're not seeing the panic, and the clear signal is that you don't have everything down, what you're seeing instead is just a rotation of capital. So capital, again, yesterday and the day before was coming out of the Facebook alikes and going into oil and energy stocks like Exxon. We saw Exxon pop big yesterday. And today it's coming out of Exxon, out of SDRL, out of Chesapeake, out of U.S. Steel, and Freeport-McMoRan, going into the FANG stocks like Google, Facebook, Amazon, and so forth. So that's really important for you guys to understand. I can't stress that enough. And again, just make sure you're aware of that and you fully understand it. And that's really what's going on here, folks. And reading these charts, it doesn't take a genius. I can't stress that enough, folks. It does not take a genius to really understand how to read the charts and position yourself accordingly. I've done it for so long at this point that it's second nature. I can teach an ape. I can teach an idiot, frankly. I really could. I really absolutely could teach anyone how to read these charts, and we do it through our webinars here at In the Money Stock. And just to give you a quick sense of it, folks, just take a look at our track record. Our research center is swing trades, right? So our swing trades for this year that we've given out in the research center that I've taken, here's the research center page. You have a 7-day free trial. Just go down here and look at the track record. Click on that button right there, and here's your track record for 2016. There's 2016. You can go to 2015, 14, 13, 12, etc. These are third-party verified. Look at that. Look at that right there, 204%, guys. Incredible. All right, and this is honestly normal for me. This is normal. Okay, absolutely normal. And here's a couple losers so far this year, but everything. Look at all that screen lately, because the market's been such a good swing trading market, absolutely fantastic swing trading market, and net gain 204%. In other words, if you just put 10% of your portfolio in each trade, you'd be up 20% so far in basically 2 months. There's no hedge funds doing that, folks. We're on pace to do 120% net return at just putting 10% in your portfolio. Now, if you put more, you're making more than that. I mean, here you can see if you did all your money in every position, you'd be up 200%. But, let's be reasonable here. I don't want anyone doing that. Really, I'm comfortable with the 10% of your account or anyone's account in a particular trade. And that kind of diversifies you out, right? So that's the goal there, folks, and I think that's the key to do. All right, bottom line is, folks, just go back to the Research Center under Investor Trade Alerts, click on that, take the 7-day free trial, start making money. It's so easy a caveman could do. It really is. Talk to you soon.